Hey everyone, welcome back to Corporate Decoder. Today Strive Incorporated just filed this current report and I am seeing a massive Bitcoin purchase and some interesting balance sheet shifts. Quick note, this is not financial advice, just my take on public filings for educational purposes. Strive is buying a lot of Bitcoin, and their stock and preferred stock numbers are changing significantly because of it. So what we're looking at here is a Form 8K filing. Think of this as a current report that companies have to file when something important happens, something that the company's investors would want to know about right away. And for Strive Incorporated, that important thing involves their ever-growing Bitcoin treasure chest. The date of this report is the 22nd of June 2026, and it covers events that happened very recently. The company announced that between the 15th of June and the 21st of June of 2026, they bought a whopping 759 new Bitcoins. This means they spent a considerable amount of money, paying an average price of about $65,850 per Bitcoin, and that price includes all the fees and expenses. This is a significant move, showing their continued commitment to holding this digital asset. Now, who is Strive Incorporated? They are based in Nevada, and their ticker symbol for their class, a common stock, is SS. They also have a variable rate series, a perpetual preferred stock with the ticker SATA. Their class, a common stock, is traded on the NASDAQ, and so is their preferred stock. It is worth noting that Strive is classified as an emerging growth company. This usually means they are newer and have less than a certain amount of revenue. The main event here is under other events. Strive is giving us updates on their holdings, not just the Bitcoin they bought, but also their cash, their investments in other stocks, and the number of shares outstanding for their different classes of stock. Let's dive into those numbers. We're comparing their financial situation on the 12th of June of 2026 to the 18th of June of 2026. First, cash and cash equivalents. This is basically the money they have readily available. On the 12th of June, they had $141.4 million. By the 18th of June, that number had grown to $144.5 million. That is an increase of about $3.1 million in just a few days. This suggests they're either generating cash or perhaps received some funds that boosted their reserves. Next, they have something called STRC stock. On the 12th of June, the fair value of this investment was $47.8 million. By the 18th of June, it had dropped to $44.7 million. That is a decrease of about $3.1 million. So their investment in SRC stock lost value during this period. Now, the star of the show, Bitcoin, on the 12th of June, Strive held 19,105 Bitcoins. By the 18th of June, that number jumped to 19,864 Bitcoins. This is a direct result of the 759 Bitcoins they purchased in the period we just talked about. This shows a clear strategy of accumulating more Bitcoin. Interestingly, the number of CRC stock shares they held remained constant at 505,000. This means they did not buy or sell any of these shares during this specific comparison period, even though the value of their investment changed. Let's look at their stock. The number of Class A common stock shares outstanding went from 69.8 million to 71.7 million. That is an increase of nearly 1.9 million shares. This kind of increase often happens when the company issues more stock, possibly for employee compensation, acquisitions, or to raise capital. Now, their preferred stock, the SATA stock, the number of these shares outstanding also increased. It went from about 7.5 million to 7.8 million shares. That is an increase of over 315,000 shares. This suggests that they may have also issued more preferred stock. Now, like most public companies, Strive includes a section on forward-looking statements. This is a legal disclaimer. They are basically saying that some of the things they say might be opinions or predictions about the future. These statements involve risks and uncertainties, and the actual results could be different from what they expect. They list a lot of potential risks, and it is important for investors to pay attention to these. One of the risks they mention is the outcome of any legal proceedings. This is a standard but important point. If a company is facing lawsuits, it can distract management, cost a lot of money, and even impact their operations. They also mention a merger transaction with Semler Scientific Incorporated. This highlights a significant corporate event they are managing. A big risk here is that the expected benefits from this merger might not come true, or they might take longer than expected. This is common with mergers as integrating two companies is complex. Another key risk they flag is dilution. When a company issues more shares, it can dilute the ownership percentage of existing shareholders. If you own 100 shares out of a million, you own 0.01%. If they issue another million shares and you still own 100, you now own only 0.005%. This means your piece of the company becomes smaller. They specifically call out dilution from their Class A common stock, and their SATA stock. Despite all these risks, Strive states that they believe their future predictions are based on reasonable assumptions. However, they also caution that there is no guarantee that actual results will match these projections. They direct investors to their annual reports and other filings for more detailed information about these risks. The report is signed by Matthew Cole, who is the Chief Executive Officer of Strive, Incorporated. So, what is the story here? Strive is actively growing its Bitcoin holdings. They bought a significant amount recently. This move often signals confidence in the digital asset's future value. However, this accumulation comes alongside a notable increase in their outstanding shares for both common and preferred stock. This could mean dilution for existing shareholders, which is a point of concern they themselves highlight. The decrease in the fair value of their STRC stock investment also warrants attention. While they hold the shares steady, the market value of that investment has declined. This could be a drag on their overall financial performance. It is a mixed picture. They are aggressively pursuing a digital asset strategy, but they are also issuing more stock, which can impact current owners, and facing market fluctuations on other investments. When we look at companies that aggressively buy digital assets and also increase their share count, it is a strategy that can lead to significant upside if the asset performs well. However, it also carries substantial risk, especially when paired with dilution. Companies like MicroStrategy have followed a similar path with Bitcoin, and while they've seen gains, the volatility of Bitcoin and the impact of share dilution are always factors to watch. Historically, companies that are heavily reliant on a single volatile asset like Bitcoin, and that are also diluting their shareholders, can face significant challenges, especially in an economic downturn. What I am actually looking for is clarity on the long-term strategy behind the increased share issuance. Is it solely for operational needs, or is it tied to further Bitcoin acquisitions or other strategic initiatives that might further impact shareholder value? Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.